for those of you that are wondering, what did we let go from April? All we let go of was the pound Kiwi because it lost any validity in terms of being, that was the only pair that we couldn't justify being a distribution fade because we didn't have a good setup. We didn't have any justification for that setup. So if we go on over here, and this is very much a part in many ways of the advanced trend trading conversation, because part of trend trading is to understand that just because a trend is broken does not mean we reverse it. Part of understanding when a trend is broken means that we understand what market transition it has segued into. And even though we had a 2 to 4, I really couldn't find anything that I liked a lot in terms of wanting to set up a distribution fade. I mean, looking back, I'm sure there's something we could have found, but I didn't find anything at that moment that really caught my eye with breadcrumbs and near-term highs and lows that identified the trading range. So we let that one go completely, and I took a hit on that position. But other than that, everything else transitioned from the trend to a fade, in which case I stayed on the same side of the original entry, but then the justification for staying in and the risk management went from swing to a fade, which does dramatically change not only how tight the stop loss is, basically the range, whichever side of the range I'm playing, plus about 10 to 12 pips. So it changed the side of the range I was playing, but I stayed on the same side of the trade, which I think was the important part. And again, I think it's easy to look at the P&L and see that, okay, for the most part, a large part of this P&L is that roughly 15 from the Aussie versus Loonie. And again, those are positions that date back to a February entry. But what I want everyone to realize is most everything else is either in April or just recently a early May position. So most of this is 4 weeks, pretty much 4 weeks or less. Most of it, nearly all of it, is 4 weeks or less. So we rebuilt our book pretty quickly. And I don't mean in haste, but there were opportunities, and we massaged them through most of April. So you could look at this as minus 15,000. You can look at 30+ thousand of this as your April gains, which at some point here in May, and possibly even today, I'm going to unwind a good bit of this because, and I mentioned it in the morning chat, we can't view this as the same type of market that we've been playing for the past 2, 3, 4 months. Most of these are in distribution. And I don't mean the ugly distribution of, say, the pound Kiwi, but most of these are in distribution in the variety of the Aussie Loonie, where we had some semblance of a trend. And now we're having to readjust those expectations and trade them within the context of that 2 to 4, despite some of the dramatics we're seeing on these U.S. dollar correlated positions, like primarily the Aussie U.S., Kiwi U.S., but then secondarily the challenge that dollar weakness poses to our euro sells. So, you guys know a big part of what we've been playing is not the euro or the U.S. dollar. As long as those were pretty much staying within a range, we were fine. But what we're lucky here is we've got Aussie and Kiwi strength coming in, combating some of this euro strength that we saw with, interestingly enough, that Spanish PMI. Now, this is not a euro that suddenly got strong, but it is not a driver. It is not a primary reason. I don't want anybody building a trade based upon a US dollar or a euro being a driver. And you know, that's really a big part of the advanced trend trading concept. It's a big part of the advanced trend trading approach. If you don't have an individual currency story that is discounting in a way that reflects the majority of the fundamental discussion, you don't have a clear story. And without a clear story, you're not going to play those monster trends. So just because it's being talked about doesn't mean there's an opportunity. There's a big difference there. So, you know, as we move forward with the mentorship and as we move forward within our positions, I think that we're going to keep coming back to Aussie Kiwi and pound sterling. And as much as some traders may be tempted to start selling dollars, don't let that be a driver. If you are thinking about the US dollar, the greenback, as a near-term tomato can, I get the inclination, but protect yourself by making sure you're pitting it against a stronger story. And Aussie is definitely one of them, has a central bank support behind it. And I'd like to think after the employment data, after 6:45 p.m. Eastern tonight, the Kiwi's going to join that party. So despite any kind of, you know, I know a lot of you are seeing a doubling of your P&L pretty much in a single session. But remember, this is where we're going to start to pull some of this in, realize a profit. And again, some of these I'm going to just go ahead and start to roll maybe just the way aggro positions out of, so I can start to pay myself for the month of May. What a concept, right? Okay, so that is just kind of a review, a midday review of where we're at right now.